Hi there, welcome to my Mortgage Pro Max. Are you trying to decide between a bank statement loan and a traditional mortgage? You're in the right place. Today, we are breaking down the differences to help you figure out which option is best for you. Let's dive in. First things first, what exactly is a bank statement loan? It's a type of mortgage that allows you to qualify based on your bank statements instead of traditional income documents like W-2s or tax returns. Perfect for freelancers, gig workers, and entrepreneurs. On the other hand, traditional mortgages require standard income documentation such as W-2s, tax returns, and paid stubs. They are ideal for salaried employees with a steady income and a strong credit history. Let's compare the two. Bank statement loans offer flexibility and are tailored for those with fluctuating incomes. However, they might come with higher interest rates. Traditional mortgages often have lower rates but require more documentation and a stable income. So, which one should you choose? If you are self employed or have a variable income, a bank statement loan might be your best bet. But if you have a steady job and can provide the necessary documents, traditional mortgages could offer better terms. Remember, the right choice depends on your unique financial situation and goals. It's always a good idea to consult with a mortgage professional to explore your options. There you have it. A quick comparison of bank statement loans and traditional mortgages. Thanks for watching and happy house hunting. If you found this video helpful, give it a thumbs up and subscribe for more mortgage tips. Have questions? Drop them in the comments below. Thanks for watching and happy house hunting.